Yeah, no, dude, I haven't looked at my Skillz holdings in a while. I just invested because Cathie Wood's invested in it. You know what I mean? Check it out. I mean, if we pull up Cathie's ARK.com, dude, holy crap, buy high and sell low much? I wonder why she sold. Maybe the price went up like super high or something like that. Let's check it out. 450? Dude, she must be down like 90% on her holdings. This bodes well for my portfolio, and I'm sure it does for yours as well. My name is Trey McKee. Today we're going to be looking at Skillz, why we even invested in them in the first place, what the original investing thesis was. In yesterday's video, I talked about the absurdity of the diamond hands concept. When does diamond hands actually, when is it a good idea to have diamond hands? And I think Skillz, for me, in my situation, I believe it's not a bad idea for me to be diamond handing. I don't know about your situation. I don't know what your needs are. I don't know what your taxes are like. So don't listen to me for your situation. I'm just talking about me here, right? So Skillz, why did I even invest in the first place? Has anything changed about their industry or about their business? Should we be running to the hills like Cathie Wood did, selling out at a massive loss? We don't know. I mean, maybe Cathie Wood found something else that she could go and invest in that's like a super steal right now. But for me right now, I invested a while ago. I don't want to lock in those losses, but should I take my remaining, whatever it is, 20, 30% of my original investment and just run with it? Or should I hold on, hoping for brighter days again in the future? I think we did just see in today's market, Skillz was up 12%. And actually a lot of small caps were up big time today. So don't take that as something necessarily Skillz specific, like, oh, Skillz just, released some crazy earnings or something like that. Speaking of earnings, their earnings are coming out in a couple of weeks, I think 13-ish days from now. So I'm really looking forward to that. And there are so many different things that I think we can learn from that earnings report that will be really, really pivotal for me deciding how long I want to stay invested in this company. But first, we're going to review some of the things, some of the reasons we were initially invested in Skillz. And then I'm going to also look at some of the weird, not so comforting news tidbits that have come up lately. So third quarter of 2021 was their 23rd consecutive quarter of revenue outperformance with a 70% year-over-year revenue growth figure. Check it out. Here is the chart that they provided at that time. We see that their revenue is basically just keeps going up and up and up. Monthly active users, that figure there on the right side, doesn't only go up. We saw in quarter 2 of last year that it dipped a bit. And a lot of that might have been to the economy opening back up again, people being able to go outside and be with other humans instead of just playing on their phones all the time. If you look at their balance sheet, they have way more assets than liabilities, and generally software isn't, super duper expensive and can be high gross margin, high net profit. And we're seeing those figures start to move in the right direction. But one of the challenges for businesses like this is how much money does it cost to acquire a new customer? Or the KPI, the key performance indicator that Skillz likes to use, is CPI, cost per install. And going back to some of my previous videos, we talked about a couple of the acquisitions and strategic partnerships that Skillz has made back in 2021. And one of those was the ARK acquisition, which was an advertising marketing company that they not only bought to lower their own cost per install, but also to buy it as its own company because advertising companies make money. So one of the promises of the ARK acquisition was hopefully that Skillz would be able to dramatically decrease the amount of money it costs to advertise, to give bonuses to, like when they sign up. I've covered this in previous videos. When you sign up, they'll be like, if you put $10 on your Skillz account right now, we'll give you $10 for free, kind of thing. That is their biggest expense, and that's always been their biggest expense. And the ARK acquisition hopefully can have a really big impact on that. We know that acquiring companies and adapting all of their systems and their team and their company culture and all that stuff into the larger companies, the parent companies' systems isn't something that you can do overnight. But Skillz was saying that hopefully we should start to see the fruit from that deal kind of in quarter 4 in the earnings coming out next week. And I'm really, really looking forward to that being a big deal. And if we can see that trending in the right direction, as well as monthly active users continuing to grow, as well as revenues continue to grow, I think the future looks definitely more bright than it does right now. But going back to the price of the stock as we know it right now at $4.58, you know, everybody says, I think it was Warren Buffett who first said it, correct me down in the comments section if I was wrong, be greedy when other people are fearful. And that's very much the story with, I guess, not only Skillz, there are a lot of different small caps in this situation, but there's like very little confidence in Skillz right now. And we see a lot of people running from Skillz. So depending on how that earnings comes out in a couple of weeks, could be a really, really great time to get started on your position. And speaking of confidence in the company, who knows better about the future of the company than the insiders? Check it out here on the bottom illustration. Here we have insider trading. There's quite a lot of buying going on. There is a sell that happened at the end of December. Nothing yet in January or February, and a lot of these, of course, are just options or grants where it's like, hey, thanks for working for us. Here are your stock options kind of thing. But there are some buys there too, which is better than seeing a lot of sells. And notably, the guy at the top who did sell only sold 1.74% of his position. So that's kind of a cool thing to see. Moving on up to the top illustration there, shares held by institutions, 51% of the company is owned by institutions. Short interest of 13.7%, which is, you know, higher than I'm super duper comfortable with, but it's kind of understandable considering how hard hit a lot of the small caps have been in the last couple of months. I don't think, you know, anybody's out to necessarily just destroy the company or something like that. And I don't think they'll win out. But before we go on, I also wanted to mention that when they went public, they predicted that this year, 2022, would be the year that they break into positive EBITDA. But that being said, last year they predicted only a $14 million loss of EBITDA, but they ended up hitting negative $104 million even in just the first 3 quarters. Now, it's hard to say what that means because you can't predict what kinds of business opportunities will come up in the future. We know that Skillz has always been really disciplined about having a lot of cash on hand, but they keep that cash on hand to make big acquisitions like we saw with ARK and the partnership we saw with Exit Games. The Exit Games deal is really, really important because up until now, or up until recently, most skill games have just been like, you play a game for a minute and it records it, and then it gives your competitor the exact same board, records them for a minute, and then compares your score. You're not necessarily playing asynchronously. You're not running around like racing a car or shooting at each other asynchronously, but the exit game deal will allow them to start to do that. And that's another one of these deals that's very much going to change the future of the company and maybe even the future of the mobile gaming industry, by bringing actual cash competitions into the mobile gaming industry, which to my understanding hasn't really been a big part of things yet. But I think one of the really big reasons for those big losses in the first 3 quarters of last year was because you can't plan out these kinds of acquisitions or partnerships too far in advance because you don't know that they're deals yet. But now this really pivotal earnings that's coming up in a couple of weeks is going to show us maybe how those are starting to play out. Now, the Exit Games thing, they're straight up making entirely new games for this new capabilities that they'll be offering. And so I think it's still going to take even a few more quarters or maybe even a couple of years for those to start to pan out as well. And while Skillz is known for having a pretty solid balance sheet and usually having a lot of cash on hand, they do dilute a little bit. We did see in the last quarter they introduced 10 million shares, which I think brought them from 385 million up to 395 million. So not super massive dilution, and they've slowed down, especially compared to 2020. But the elephant in the room is the $300 million senior secured notes that they issued a little while ago. Now, senior secured notes are basically a bond, and they go out and they say, hey, we need $300 million, and we're going to pay you some interest rate to lend us your money. And that can be not really a good sign for the future of a company. If they're having trouble getting money from normal banks or from other sources that are much cheaper, a lot of times they're pushed into a situation where they just have to do senior notes. And like they say here, 10.25% interest rate on senior secured notes due 2026. And that's probably not a good thing. They're paying a really high interest rate to get this $300 million, even though they've kind of always had a lot of cash on hand. Last quarter, I think they had 500 million. So it's like, either there's something going on behind the scenes where expenses are just racking up way out of control, and they're like, oh my gosh, we need to get the most expensive money we can get so we don't die now. Or the positive, hopeful way of looking at it is that maybe they just found a really good deal and they're just like, this is the quickest, easiest way to get money without diluting our shareholders. And maybe they're going to come out and announce some, big acquisition or partnership. And so it's not very easy to interpret this. Of course, in the press release here, they say on the bottom paragraph, this offering bolsters the company's already strong balance sheet and increases the company's financial flexibility to take advantage of strategic opportunities. Skillz intends to use the net proceeds from the offering for general corporate purposes, which may include potential investments in or acquisitions of other companies, products, or technologies that Skillz may identify in the future. So it doesn't really make sense to me, if they already had $500 million on the balance sheet, to go out and pay interest to get 300 more and just let it sit there. I'm not sure what's going on. But so far, Andrew Paradise and the crew over at Skillz have been really pretty disciplined with the way they use their money. So part of this is like, oh my gosh, what are they doing? But part of it, on the other hand, is like, maybe something's coming that we should be excited about. Maybe they're going to be growing their team massively, or maybe they're going to be building out these acquisitions even more. And that's really hard to say. And I think aside from the overall broad market negative pressure on small caps, that's one of the reasons Skillz has been so particularly beaten down. For me, I'm still waiting to see the thesis play out. When I invest in a company and I say, yeah, this is a long-term play, this is going to be, 5-10 years, I'm okay holding it for 5-10 years, even when it's down massively, like what we're seeing with Skillz now. I have been doing a little bit of options play to capitalize on the shares that I have, and dollar cost averaging as usual, which is, cool. But keep in mind that Skillz is only like 2 or 3% of my portfolio. It's not some massive position that's bankrupting me or, putting us out on the street or anything like that. Now, if you're an investor in Skillz, you really need to understand these acquisitions and how they could change the game, not only for Skillz, but for the whole industry going forward. So click up here on that video to check that out. I'm really looking forward to hearing your thoughts. Have you already sold out of Skillz? Do you hate it? Are you tired of seeing red in your portfolio every day up until now when we got 12% out of nowhere? Looking forward to hearing back from you guys. Thank you very much. Stay generous. Love you guys and talk to you soon.